I'm Danielle Hale, Chief Economist at Realtor.com, and here's what you need to know about the economy and housing market this week as the winter holidays approach. Inflation indicators highlight just how challenging getting all the way to the Fed's 2% target may be. Consumer price inflation edged up as falling energy prices couldn't fully offset increases in shelter and other prices. Core inflation, a measure of underlying price pressure, also remained elevated, and producer prices showed similar upward pressure. One bright spot, although shelter prices still moved up, they are decelerating as asking rents continue to fall. Despite the overall pickup in inflation, I expect another quarter-point rate cut in next week's Fed meeting. With unemployment ticking up, the Fed is likely to aim to stay on its recent path. But I also expect the Fed's new economic projections, statement language, and ensuing discussion to open the door to a much slower pace of cuts in 2025, something investors are also looking toward. Nevertheless, mortgage rates eased this week, dropping to 6.6%. Improvement in mortgage rates and the outlook for lower rates ahead seems to have bolstered home purchase sentiment, which ticked up for a fourth straight month. The share of consumers who expect mortgage rates to fall was a survey high 45%. The Realtor.com 2025 housing forecast also anticipates somewhat lower mortgage rates by this time next year. Lower mortgage rates are good not only for buyer demand, but also for sellers. In Realtor.com weekly data, we saw that despite volatility from the Thanksgiving holiday, new listings continue to edge up. Interestingly, sellers are meeting a slower moving housing market by moderating their asking prices. Finally, there are two top 10 lists worth covering. The first is our monthly hottest housing markets, where we highlight the areas where current demand outpaces current supply. The number one hottest market in November was Springfield, Massachusetts, while among the largest markets in the country, the New York metro area was the most improved, highlighting the strength of the Northeast region. The second is our top housing markets for 2025. In this report, we break down the markets that are expected to see the largest increase in real estate transactions, propelled by both sales and home price growth. In 2025, low-cost Sunbelt markets, where construction has been more robust, are expected to be the top performers. Top markets are also often home to younger populations, and recent buyers more often used mortgage products like VA and FHA loans, which permit lower down payments to help open the door to homeownership. Of these, Colorado Springs is the expected number one. You can find the rest of the rank-ordered list and all the details, including full reports and our housing data for download at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates and Instagram for graphics.